Hi everyone, my name is Muskan Arora and I'm a reporter at Markets Group. Today with me is a very special person, Pichet Jaensubhakij. He's just come off stage winning a Lifetime Achievement Award. Congratulations, Jeffrey. How are you feeling?
Muskan, thank you very much. It's a great honor to receive the award. Frankly, wasn't expecting this kind of award, but anyway, I'm very thankful for the recognition.
Amazing. And currently, a lot of allocators, especially within private credit, are both excited and nervous, a bit cautious as well. What is your outlook on the same?
Yeah, no, I think private credit has had a very good run. We first of all, maybe starting 3 years ago, we had very high base rates, which obviously helps the beginning yield, but we also had large spreads. And that was because there really were a lot of borrowers who were out there that banks were not servicing well, some LBO-based companies that needed new financing. And so there was a lot of demand and not that much supply. I think 3 years, 4 years after that, actually we've had a lot of supply come in and credit spreads have tightened quite a bit. So I think from here going forward, especially if rates come down, then maybe the future absolute returns might be a little bit harder. But I think the other important thing is that at the end of the day, each manager that does private credit has a different underwriting capability, a different origination pipeline, and so the credits that are in each of the managers' portfolios will be very different. And I think it now becomes even more important for the allocators to choose their managers well, to make sure that their managers are the ones who continue to underwrite with discipline, who have strong documents and good governance.
Absolutely. And as a former Group CIO at GIC, you've strategically chosen your team and you've retained good staff. How have you done that?
Well, it's very kind of you to say that. I mean, we were very fortunate at GIC in that we were a large organization with a large AUM base, and therefore we could actually afford very large teams. And so every asset class, would have the headcount to be able to hire good people. However, being a government organization, there's only so much that we can pay, and relative to commercial GPs, we needed to hire people earlier in their career before they, had a lot of carry and therefore wouldn't move. But I think we were fortunate in that we were able to continue to train up and incentivize our staff, and importantly, as you said, to help them to stay. And in order to do that, I think what we tried to do was to figure out what was the potential that each person that we had hired in really had, and to try to accelerate their promotion if possible. And then as managers, then we also try to make sure that we understand and care for each employee as a person rather than just a producer of alpha and so on. So I think the combination of that personal attention, the possibility for development has helped us to retain people.
Absolutely. That's, again, I have to say that's very well put, very beautifully put. Lastly, what are a few trends that you're anticipating in the next 5 years, especially within the private markets?
Yeah. So I think maybe clearly the broad trend is AI.
Yeah.
And some slivers of the private market, whether it's VC or in infrastructure, data center, or in energy where you're building for this data center, obviously seeing a very good tailwind right now. And I think, but the private markets at large, I think will end up being users of AI. And I think we will see a differentiation both in public and private markets between the people who can use AI well, uses its capabilities to improve their operational processes, raise their margins, outcompete, and so on. And those companies will do well, whereas those who are a bit slower may actually lose market share and so on. So I'm afraid within both the public and private portfolios, we will see that differentiation between winners and losers. And the question is, how do the GPs really get their companies to then get on the AI bandwagon fast enough? I think the other thing that I think about, is that from a longevity perspective, we are, seeing more and more people put money into private illiquid assets, including on the retail side. But in order to really finally get your exit for these things, then the public markets still need to pick up, and for you need to be able to get exits. But it does seem like we're already extending that longer and longer, and therefore as a result the IRRs are deteriorating a little bit. So I think that will be a headwind for privates.
Amazing. Thank you so very much. Congratulations again on all your hard work and success. You truly deserve it.
Thank you so much.
Thank you so very much.
Pleasure to be with you.
Yeah, thank you.
All right.